Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. Global liquidity is one of the most important factors that affects the price of Bitcoin. And when you measure it that way, there are really two parts to world liquidity. Two things are important: the rate of credit formation and the strength of the dollar. The strength of the dollar is important because a lot of foreign debt is denominated in dollars, which is why global liquidity is often measured in dollars. So the dollar is a pretty important part of the equation. To improve global liquidity, you can either get faster credit or make the dollar lower around the edges. In both cases, you're changing the denominator, which makes the liquidity better. A $418 million purchase spread across several funds, including a $238 million stake in BlackRock's eShares Bitcoin Trust, is making the Bitcoin ETF market move in a big way. This move fits with the SEC's growing willingness to allow mainstream Bitcoin exchange-traded funds, which could mean that Bitcoin prices will continue to rise. Lyn Alden, an investment expert, recently talked to journalist Paul Barron about Bitcoin's promise as a store of value and the problems that come with its volatility and lack of regulation. Alden also talked about PayPal's move into the stablecoin market with PUSD, which has become worth $500 million very quickly. Even though big names like Tether are currently in charge, she stressed that changing rules and the rise of stablecoins that pay out returns could have an effect on the market. Even with all of these problems, Alden thinks that Bitcoin's price might go up soon because more institutions are becoming interested and regulations are changing in a good way. Watch clips from the talk to learn more about what Lyn Alden said. There are people who think that world liquidity is one of the most important factors that affects the price of Bitcoin. When measured in that way, world liquidity is made up of two main parts. One is the rate of credit creation, and the other is the strength of the dollar. This is because, as I already said, a lot of foreign debt is denominated in dollars, which is why the dollar is often used to measure global liquidity. That part with the dollar is pretty important. You can either get more credit made quickly, which would improve global liquidity, or you can get the dollar to lose value around the edges, which would also improve global liquidity because you'd be changing the base. So I do believe that we will have another good liquidity cycle in the coming years. As central banks try to tighten, things have been pretty much the same there for a while. I believe we will likely see another move up. As a base case, I think Bitcoin will do pretty well because Bitcoin and safe coins have been the two biggest users of crypto in the past. Okay, a lot of people have become interested in these two things, even during bear markets and boom markets. Bitcoin is a new way to keep value. The main thing is that it is a better form of money than most other money we know, but not many people hold it yet because it's still small. As it goes through these stages, people try to build trust in it. While it hits its total addressable market or gets close to what it will be in the end, it's volatile. When it comes to money, stablecoins are just digital dollars. The need for dollars or desire for them is met by this. There are really only two main ways to use fixed coins so far. One of them is the basic unit of account for trading and defying on different crypto sites. A lot of that will happen on Ethereum. The other big use of steady coins is to meet the need for dollars in the global south, which Tron does well for. That's pretty much two different worlds of the same thing. In this case, stablecoins are very helpful as a short-term store of value, like operating capital. Basically, being able to handle fluctuation is a bit of an advantage. With stablecoins, you can think of them as your checking account if you're in a situation where dollars are useful. The more financially stable you are, the more you can say, I'm willing to hold something for the next 4 years. What do you think? Do you think it will settle on Tether USDC, PYUSD, or one of the European stablecoins? Where do you think that market is going to go from here? Net effects have been proven to be important so far. It's almost like liquidity leads to more liquidity. So far, Tether's network effect has been pretty amazing, probably stronger than I thought. Additionally, I have been keeping an eye on some stablecoins that offer yield. You can think of these as tokenized T-bills or things that try to give the yield to the user instead of the issuer taking it. Even then, they've grown, but they're not really taking over the market very quickly. It's clear that network effects are pretty strong for stablecoins. I'm not sure how many there will be or how strong the network effects will be because some of it is like the negative effects of rules being too strict, Some onshore ones try to use the government against the foreign ones, and things go back and forth. So I wouldn't try to guess what will happen in some situations. Given how big and valuable the stablecoin market can be, I do think it makes sense for these different groups to try to get into it. But it's hard to say what will happen, taking things as they are. I think Tether is in a very strong place. Even I mean, a prime dealer has been more in favor of Tether than its competitors onshore. I don't think there have been any strong attempts to change that, so I think things will stay the same. I believe that some steady coins could continue to gain market share in the United States. But around the world, Tether is so far ahead that it would take a lot of trouble to change that. So I think the current trend will continue. Lyn Alden points out that Bitcoin has the same number of transactions per second as standard systems, even though the number of transactions per second is smaller. She says that Bitcoin, which is an open source and international alternative, could finally take the place of current settlement systems, which are inefficient because they handle a lot of transactions but not many volumes. Alden thinks that Bitcoin's volatility will go down as it becomes more spread out and less concentrated among a few users. Volatility is a sign of price stability. Alden also thinks that AI will play a bigger role in the crypto business, which will make things run more smoothly and get more done. Even though regulatory problems with bigger cryptocurrencies are more pressing, she is hopeful about good legislative developments for Bitcoin and sees backing from both parties as a sign of hope. With these things in mind, Alden's research shows that Bitcoin's price might go up as more people use it and as regulations become clearer. To learn more from Lyn Alden, let's watch more clips from the talk. First, I like to compare the sizes of settlement amounts because, as you said, that number is ridiculously big. The United States GDP is measured in tens of trillions of dollars, but the gross settlement amounts are over $1 quadrillion. And what's interesting about that chart is that it shows pretty much the same kinds of deals that Bitcoin can make. On average, it's about the same number of deals per second. The only difference is that it's not open 24 hours a day, 7 days a week, and only certain people can use it. This means that Bitcoin is a lot like a Fedwire, but the global open source one is much smaller so far. Okay, that's kind of why I compared them. You can add things on top of them. Because it's at the bottom of a stack, Fedwire handles an absurdly large amount of processing for a small number of activities. I think that trend of less instability will continue for a long time. I mean, we've been through it for 15 years now. Basically, I think it has a lot to do with how widely held it is. If many people don't hold on to something, one big player can use their power to blow it up and move the market, or they can buy in and move the market. When you get 5 times more of an asset's broad distribution. On the other hand, you have more. There's been a cycle of distribution in the past where longer-term whales will reduce their assets during bull markets to make room for more liquidity. Then, during bear markets, it usually goes back to the people who have the most money, but every time it does this, Bitcoin's holders become more spread out. It's kind of like how a startup company becomes a widely traded company over time. And I think that once we reach a certain point, the volatility and uncertainty around the stock will go down over time. Do you think this space will change, or do you think it's already reached the peak of where it can go in terms of AI adoption? I believe it will go much higher than it is now. Finding out who makes money from this is one of the hardest things, I think. Of course, the companies that make GPUs are making money. The question is, how much money will be made on the other side? It's possible that this will be one of those quiet changes where the only people or businesses that really benefit are the ones whose productivity goes up because of it. As with how automation made blue-collar work much more efficient, this will lead to higher long-term productivity because one person can